everybody, welcome back to our indicators class. It's been a while since we talked about indicators, so today we're just going to talk about the volume indicators. We've been dealing about or talking about the indicators for a while now, so those that are just joining us for the first time, you can find the way and check our previous videos on here in our channel, so you can see for yourself and help to understand our subject or our area of concentration today. So if you check our previous class, you see where we talk about our various type of indicators, where we talk about the trend, talk about oscillators, and in this very moment we're going to be talking about the volume. Yes, we're going to be talking about the volume indicators. So the volume indicators, the volume indicator in Metatrader 4.5 is a tool that visualize market activities. So each time you hear the volume indicators, you should just know that we're referring to a tool that visualizes the market activities. What is a market activity? So we are thinking about market activities. This is just all about things you see in the market, in your everyday market, but this is a digital feed. So we're going to be talking about this in our digital feed or digital aspect of trading. So back to the volume indicators. The volume indicators help to visualize market activities. What are market activities? These include buy and sell activities, and it is done digitally with the help of the volume indicator. So when you apply the volume indicator to the chart, it appears in form of an histogram. Let's just do it now as we're studying together. So under the volume, you see a lot of indicators that are alongside with it, but we are just going to talk about the major one, which is just this volume. So we're going to click on it. Let's just click on it. When you click on it, you see the parameters which include levels, time frames, style, and under this parameter you see something like volumes, and as a default you see tick. But if you click on it, you see other things like real volume. So it's according to the basics, the tick volume is always on the default, so we'll just use the default one. Click on save, and if you check here, automatically it's already here under the chart. So when you apply the volume indicators to the chart, it appears in forms of histogram below the chart to measure the volume of trade by sellers and buyers. The volume indicator is divided into various parts or bars. First we have the green bar, the red bars, and as you can see here, we also have height, just as you can see underneath the chart. So talking about the various parts of the volume, first we have the green bar. The green bar over here, as you can see on the chart, the green bar indicates or is a bar which current says that the current candle is higher than the previous candle. Let me just show you. So right now on our chart, on this chart and on this trade, you can see the previous volume bar that we are seeing here. It's showing green. Now what does this green bar say? It indicates that the volume for the current candle is higher than the previous candle. So when this candle is being created, we already have a previous candle which says it's also green. So what it says that this previous candle that's here before this one is showing green. It states that its own volume is higher than that of the previous volume, and this other volume here that is still showing green is also higher than that of this one. That is what the green bar is saying. It's always telling you that the volume of buyer and seller for this particular point in time is a high volume market. Do we understand? Now, why the red bar indicates that the volume for the current candle is lower than the previous one. So if you check in this current session, you will see we have red and green bars under this volume panel. So the red one in this previous volumes that had happened, the red one here indicates that the current bar for this red one is lower than this one here. That is just the basics when it comes to dealing on the volume indicator. While the height, which tells you the amount of volume that has entered the market. So the volume for this part, as you can see as I'm moving the cursor in this volume pane, you see that this one that is showing green is higher, showing 7,293 in volume, also with this previous one which is showing lesser amount. So do we get that now? So that's just the basis for the volume. So the height, when you talk about the height, the taller the bar, the more intense the activities of the particular market, and the more price changes during that time frame. The volume indicator is much effective when you are confirming price action in different ways. So that's what the volume indicator is basically all about. When you are dealing with the volume indicator, it becomes easy for you to understand what buyers and sellers are agreeing to. Are they agreeing to a bullish move? Are they agreeing to a bearish move? They are all under the all under the volume. So the volume is an indicator that indicatedly tells you or tells a trader what the volume for each candle states in a particular point in time of the market. So if you are the type of person that normally don't trade without using the volume, there's a possibility that you will not have an idea of what both the buyers and the sellers are trying to do at that particular point in time of the market. So by knowing about the basics of volume, it can be very easy for you to know if a market is going to go bullish or bearish. Yes, it's very easy to know. Now, for you to know this, you have to understand that volume works hand in hand with price action. Yes, volume works hand in hand with price action. What is price action? The movement of price from a higher place to a lower point in time. That's just all about price action. The movement of price from the higher place or a lower place, it's just all about movement. That's price action. Whenever you hear price action, you don't have to think about something crazy, or you don't have to overthink. You just know it's a movement from price from a lower point in time to a higher point in time. So with the help of the volume bar, you can easily identify a good price action. Do we understand? So how can you identify these things? It's a very simple thing. When you are doing the combination of what the price is saying and what the volume is saying at a particular point in time. So if you look at this previous session here, you will notice that there is a red and green volume all over the volume bar. That tells you that there was a point in time we have a low volume which is showing red, and there's a point in time where we are having a high volume that is showing green. So price rises plus volume rises, that means a strong uptrend. Do you understand? Now when you are dealing with price action, let's use this part that tells us a little of this uptrend from this section here. If you are using volume, you see when price rises plus volume rises, it means a strong uptrend, high participation, confirming a move. What does that tell you? It tells you that those that are buying are more than those that are selling in an uptrend. While in a downtrend, those that are selling are more than those that are buying, which is vice versa. So with the help of the volume, you can identify the difference between a low market price and a high market price. For instance, if you check the start of this session, you see the first volume bar that you see there, it's actually green. What does it state? It tells you that there's a lot of participation, though it's according to the height, it's a very low move compared to other moves. Just 2,488 according to the height when it comes to volume. Now that's to tell you the height of this volume of this particular candle bar and its volume at a particular point in time, telling you that the volume that was gathered in this particular point in time is what is up to like is up to like this one. It's up to like 2054 in this particular point in time. Then in this particular point in time, we see a green bar also with a green volume that tells you that there are buyers in this market participating in this market. Now, talking about the volume in a different way, volume is the combination of what both the buyer and the seller is doing at a particular point in time. So don't just think of volume that when you see a green bar, you should be expecting a bull market. When you see a red bar, you should be expecting a bear market. No, that's a very wrong perspective of the volume. You cannot see it like that, because most times it can be showing you a green bar in the volume, while over here it can be showing you a red bar in the chart. What does that tell you? It tells you that the sellers are strong. Just as we see, the green bar indicates the volume for the current candle is higher than the previous one. So if for instance you are seeing green bar here in the in the volume, and you are seeing another green bar right here in your chart, this tells you that the participation of both buyer and the seller is what is current going on in the market. And as you keep observing them in their height and also looking at them on your chart, you see the difference of how it starts to rise. Now this red bar here that you see in this volume, of course when you see it here, it shows what? It shows a different bar, which tells you what? Which tells you that this volume here that is showing red, it tells you that the volume is what is lower. So in an uptrend, you are supposed to what? To buy the lower volume in order to what? To participate in the uptrend. While in a downtrend of the market, you are supposed to what? To sell a lower volume in order to what? To participate in the what? In the market. Now this current date of the market will tell you how I took this trade in our current market condition today. As you can see, in this current condition, we have 3 volume bars right here, and we are seeing what? 3 red candles on the chart. What does that tell me? It tells me that when the first red candle was created in the chart and the green bar was created on my volume, tells me how strong the sellers are. It means the volume of sellers are stronger than that of the buyers. Now if you check the one of the green bar here, you see on the volume it's showing red, telling you that yes, it's telling you to buy, but it is a very weak sign telling you there are no buyers in this market. So if you are not good with the volume bar, this could trigger you to go long. But if you understand how volume bars work, you understand that this green you are seeing on the chart and you are seeing red on the volume is an indicator of a fake pump or a fake move, telling you that you should buy, but on the volume there are low participants, low people that are there. That indicates, low people, that the people that are trying to buy this market are very, very few. So for that reason, it shows you red here on your volume bar, telling you that there are low participants in this trade. So you as a retail trader, you don't have the guts to jump into such a trade, because if you do that, you end up being wiped out by the higher volumes. So right now, when the higher volume step into the market, which is these green bars you are seeing, automatically it tells you that the sellers are strong. So for this reason, when I checked the height of the volume, it was already higher than that of the previous one, which is 4,000, and this one is around 7,000. So with that big difference, I entered into this market, and as you can see, I'm in profit. So with that being said, the volume indicator only tells you what the buyers and sellers are doing, their activities in the market. It could be a buy activities, it could be a sell activities. What the volume does, it helps you to measure the activities of both buyers and sellers on a particular candle. Now most times I see I see a lot of traders trying to do analysis. They'll just analyze, they'll just do their basic analysis, like in talking about a whole zone, or how should I put this, more like analyzing a whole zone. For instance, the whole of this zone and the whole of this zone, analyzing whole of this zone, and more like whole of this zone like this. I've been wondering, do you know the amount of volumes that are in this zone you just marked? Most of them do not understand these basic things, and most of them do not really get it, not because they don't know what they are doing, but for the fact that that is how they were taught on how the market is being read. So for that reason, they can apply it to their own discretion or to their own way of understanding. So, but one thing you should know about volume is that volume could either be a buy or a sell volume. It's not all about when you see red on the volume, you should go short. When you see green on the volume, you should go long. No, that is a very wrong approach to how the volume indicators work. So if you check our chart now, you will notice that the volume right here indicates that the trend is a downtrend, just like I've explained to you in this class. You see that we are already close to our profit target. With the help of the volume, we could tell that this market right here has a very strong selling market or strong selling traders here that are more than buyers. Now if you check the buying pressure using the volume indicator, the two greens that are here, or the three greens that are here, if you check, you see they are actually very low compared to that of the seller. So with that being said, it was the seller that now actually won in this market. So that is how it is very easy to to know or to differentiate between a buyer and a seller in the market when you are trying to use the volume indicators to know about market activities. So trading is that straightforward when you understand the basics. So one thing you also need to understand that volume is a very, very important thing when you are trying to understand where or the direction of the market. If you are talking about volume in different perspectives, there's a way you can calculate the volume and the chart in order to get a particular point of the market. For instance, when you see price rises and volume rises, this tells you a strong word participation, confirming a move, confirming that there's a lot of people in that market. Just like this tells us right here before these major moves. This tells us right here that there's a lot of participation in this market. You see, they are all green, 3 greens in a row, tells you how strong the participation is in that market. While most times when you see a pump in volume and the price does not make a shift or a move, that tells you that the volume, the participation of that market is much, but is not up to the amount of volume that could move a market in a specific direction. So that's why you have to understand that when prices rises and volume rises, it gives you a very sure thing to follow in order to know a direction of the market. While most times when price rises and volume falls, it means a weak move. When you see prices rising, like here, like this current day, you see a rise in price here, but when you check on the volume, you see two red telling you that low participation. What does the red bar indicate in the volume? It indicates that the volume for the current candle is lower than the previous one. So when you already see two low volumes like this, it means this volume right here is lower than this one, is lower than the other. So that tells you that it's a fake pump. You can't just participate in such pump because it will lead you to a fake direction of the market while real volumes arrive. So talking about volume in different ways, when you see a price break support plus the volume is very high, that gives you a valid breakout. Those people that like using the volume to trade support and resistance, the volume indicator tells you that when a volume rises and price breaks support, this gives you a valid breakout. But when the volume is low and price is spiking high to break support, that is actually a false pump. When price spikes a massive volume, this is often a buying climax and a selling climax where the trend runs out upward busting. So the volume is actually an indicator that gives traders the opportunity to understand market activities. So if you can understand the use of the volume indicators, you can understand that when you are trading in the forex market, each volume, each candle means a lot to the market. Each candle holds its volume. Each candle represents its volume, and with the help of this mindset, you can really understand what it takes to follow the market and how to trade the forex market with the help of the volume indicator. Now, before I can round off with the volume indicator, I will have to let you understand that when you are dealing with volume, you will have a clearer perspective of how the market works generally. Now, as you can see on my chart, I'm actually trading gbpusd. Now, gbpusd on the average daily volume is approximately 1.1 trillion in a day. Do you understand what that means? It means that the trading volume of its currency, so the trading volume of gbpusd currency, the trading volume approximately in a day for that gbpusd is 1.1 trillion in a day. It is the third most traded currency globally, accounting roughly 12% of total foreign exchange turnover. What does that tell you? This tells you that, as you can see, just like you already know, I like trading, I like setting my chart on sessions, because as you can see, my chart is divided into daily session because I'm on the 1 hour chart. So what do you notice here? What I'm trying to tell you about gbpusd is that every session you see here in each day, either consolidation, trending market, or whatever way you want to classify the market to be, there is a total volume of both buyers and sellers, which is approximately 1.1 trillion in a day. So you are just a retail trader, just like me, not like you are some sort of an institutional buyers, or how should I classify this to be? You are just like a retail trader. So because you are a retail trader, you have a low capital to trade for each day or to place a trade with. For that reason, you have to think like a retail trader. Yes, you have to think like a retail trader. What am I trying to say? What I'm trying to tell you is that analyzing each day or analyzing the market by generalizing a full page like this without understanding the implication of the volume, it's a very wrong way of analyzing the market as a retail trader. That's why you see some people, it's difficult for them to trade with low amount of currency. They can never trade with a low amount of currency. Why? Because they do not understand that as a retail trader, the use of the volume is very important for you to understand how to place a trade, when to place a trade, and where to place your trade. So with the help of your volume indicators, you can have this knowledge. You know, according to what we all know, the forex exchange market has a lot of volume, the buy and the sell combined together, which are warrant to more than 9 trillions in the market. Now these volumes are now subdivided into currency pair, into commodity, stock, exchange, and so on and so forth. You know, gbpusd on my screen here is the third most traded currency, while the first most traded currency is the euro USD, and the third most traded currency is the second most traded currency is the USD JPY. So all these currency, they were all classified based on their daily volume in a day. Do you get what I'm trying to tell you? So the gbpusd, you already know, is globally traded, and the volume for a day, which is approximately 1.1 trillion, that of euro USD is around 2 trillion or thereabout, while that of euro USD is 1.3 trillion in a day. So with this being said, you have to understand that if in a day you are having trillions of trading volume just in a day, all you needed to do is for you to get the right trade for yourself as a retail trader. That is where you have your lot size. You have to make use of your lot size. You don't have to overtrade in order not to enter into a trap, and so on and so forth. And you have to work on precision as a retail trader. That's why you see retail traders that are using smaller accounts or small account or whatever form of account you can call it, whatever you think you are, as long as you are trading alone, you are not with the banks, you are not with a big institution, you are just a retail trader, regardless of how much you have in your trading account. It can be of $5,000, it can be $10,000, it can even be $100,000. As long as you are trading and you are not doing it for an institution, you are just a retail trader. So with that being said, you can always understand that each candle here has its own volume, and for that reason you as a retail trader have to capitalize on that mindset to know when to place your trade, to know where to place your trade, and to know when to take your profit and where to take your profit from. So one thing you also need to know that economically or economic scale, the most traded pairs always represent the world's two largest economy. I've already talked about this in when I was dealing with the currency pair class. So we talked about this, about large currency and how they come from powerful countries. So the most traded pair always represent the world's two largest economy or economic zone: the United States, the Europe, and the Asia pairs. These are currently now. These are the pairs that are very strong economically, as they have lots of liquidity, and their rate of transaction is usually lowest and cheap because so many people trade it, and the spread is usually low and tight. So with all these things being said, you need to understand how volume works. So you as a retail trader, you are when you are analyzing the market to take a move, it's advisable you go to a lower time frame, where the volume is less for you to take a trade, or you can go to a medium time frame where you can actually understand, like the 1 hour time frame. I use it a lot, so because that's where I come to realize how to do my trading analysis. And in most cases I go to lower time frame just to see what the movement is all about compared to higher time frame. So with all these basic things, you already understand that the volume is not just an indicator or a design on your chart. The volume is there to tell you the impact of the buyers and sellers for that day, for that week, for that month, and for that time in your chart. That's the mindset you should always have with you each time you are dealing with the volume indicator. So with that being said, you can now go to the volume bar and delete it if you want. Then in our next class, we are going to talk about the other indicators. We have already talked about the trend. We have talked about oscillators. As we already know, we talked so much about the oscillators. Now we talked about volume, and we went straight ahead to volume. Where there are other volumes there, you see accumulation and distribution. You can click on it to check it out. You see there's the parameter attached to it, set to default, and you click it there. You see how this is also represented. Now in the accumulation and distribution, those of us that are already advanced in trading, we understand that these are part of the stages of the market: accumulation and distribution. When the trade accumulates, there's always a possibility that it will be distributed around the world, or to a particular parts of the world. So all these things are all represented in the chart here based on the candlestick that we are looking at here. Then if you go to the other ones under the volume, you see them there, like market profile, money flow, unbalanced volume. They are all there. They are just still telling you about the relationship between the buyers and the sellers at a particular point in time. This one is almost the same with that of the accumulation and distribution. So they are all talking about the same thing. We talk about volume, trying to compare the volume between buyers and sellers. So if the buying volume is more than the selling volume, there's a possibility that the market is going to be bullish. But if the selling volume is more than the buying volume, there is also a possibility that the market is going to go bearish, just like as it is indicated here on our chart. As you can all see on this one I've added, talking about the volume, it's a very easy way to know about it, and when you apply it will make your trading even easier than it has ever been. Let's add it one last time before we can leave. So that's the volume bar set to default, and that's it. So right now this trade we took with the volume is almost hitting take profit. And so in our next class we are going to talk about the last indicator here on the MT5 or MT4, which is the B Williams. The B Williams is going to be the last indicator on this MT4 that we are going to talk about. Then we are going to move to our next subtopics that we already said we'll talk about in our first video. So I'll see you in our next class, and I hope you watch this to the end. Thanks for watching, and bye for now.